Yo, what is up, everyone? My name is Dom, and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this program are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright, everyone, first one I want to bring up is Microvision. Now, this is a meme stock, so I caution, a lot of people, I'm just telling you what I did on this trade, and, hopefully you can learn something from it. Always remember that these are for educational purposes only. I'm not telling anybody to go out and, do a specific strategy. Even if I might sound like I'm saying that, it's always remember that it's for educational purposes. Educational purposes only. Now, this is Microvision. This is a meme stock. If you look on Reddit, this thing is all over Reddit. It hasn't quite blown up yet. I'd say it kind of has a little bit, but there's starting to be more and more contracts trading here. And if you look at the short interest, it's back up to about 20-25%. I'm not usually in these trades, but I'm trying to capitalize here, and I'm using options to limit my risk because the premium I pay out is the most I'm going to lose. When you go out and buy 100 shares of Microvision for $2,000, you're not expecting the stock to go to zero. What I did here is I purchased the 21-28 call spread. So I bought the 21, I paid out premium, I paid about $230, and I collected about $110. If you see here, if you put this order in at the midpoint, we're paying $115 to control 100 shares of Microvision from the 21 to the 28 strike. So from the stock price of 21 to 28. Now, these options expire next week, Friday, June 11th. So this is an extremely short-term trade. We're paying we're paying $115 for something to go to 28 minus 21, which is $700. So if Microvision shoots through our short strike of 28, on June 11th, this spread is going to be worth $7. We paid $1.15 for it, so we make $5.80 or $500.80 because you multiply everything by 100 when it comes to options, because each option contract is the right to control 100 shares. So I would way rather put down $115 to control 100 shares of Microvision until next week than go out and buy the stock for $200 or for $2,000. Now, that is just my way of looking at it. These options that I got into expire next week. So, we only have till next week to have this trade work out. So, that is the trade-off. We're only paying $115 to control 100 shares, but the trade has to work out by next week. And I'm going to be extremely quick to take profits in this one. If I can make $100, $200, per spread, I will be out of this trade most likely. Unless this thing really takes off to the upside. If you can see here, this is when Microvision last blew up. There's all these little spikes in this stock here. If you look on Reddit, that's when it was blowing up. this was a nice spike. This thing is just very volatile. If you look at the implied volatility of some of these options here, it is reflected there. 300%, 200, 200 to 300%. It looks like. So this is a risky trade, but I like using options because it limits my risk. The premium I pay out, $115 for the particular spread that I got, is the most that I can lose and the most I'm willing to lose as well. So you can kind of pick a trade that works for you. Your risk tolerance. Instead of going out and paying $2,000 to control 100 shares, I only paid $115 to control 100 shares. I'm way more comfortable with that, and I can actually sleep at night instead of going out and buying multiple blocks of 100 shares of this stock. So next one I want to bring up is Visa. Now I have a position in a different account with this one. If you go to these December 240 strike calls, there's about 7,000 contracts traded here. Open interest of about 397. Now, these options are pretty cheap here. If you look at the implied volatility, now the implied volatility can be used to measure the how expensive these options are. Now, 26% implied volatility versus microvision, what we just saw was an implied volatility of about 200 to 300% depending on the expiry month. Now, I like this trade. I like somebody who is going out to all the way to December. You know, that means they have, you know, some confidence in this trade. They like this stock longer term. You know, I'll usually go out and buy the stock when I see people, you know, buying such long-term options like this, you know, in a quality stock like Visa. You know, Visa is a quality stock. You know, if we look at the chart, I like that they're buying this little pullback here. You know, they were buying before, you know, this big dip here, but, you know, I think it was this dip here. Yeah, there was some bad news that came out one day. They were buying it. You know, the news kind of freaked me out a little bit, so I did not get into the trade then. And look, it went all the way to 273. You know, every time they seem to be buying Visa, you know, the trade seems more likely than not to work out in the favorable direction. So, you know, I like that they're buying. You know, I wish they were buying it, you know, around this 220 level, but, you know, you got to trade what you have, not what you want. So, you know, I do like that there's a little bit of a pullback here. And, you know, with options, you know, even though it's a 7-point pullback here, if we were to get up to this, you know, if we were to get up to this 237 level in Visa, right now the stock is at about 230, you know, we would make a nice chunk of change on this investment, trade, investment, whatever you want to call it. You know, we'd probably make about, you know, 20 to 30% on $1,000 here, which is what the option costs here. So, you know, that's why I like options here. You know, you can get a small, you know, pretty small move in the stock here, and you can get a significant jump in, you know, what you're making, you know, versus buying the stock. You know, once again, this trade has to work out by December or earlier. And, you know, you can obviously take your profits off the table whenever you have them if you, you know, are comfortable with that. You know, you never want to be a greedy pig and, you know, let this trade go for too long and then, you know, you lose all of your profits. So, you know, I like Visa. We're in this trade, everyone, and we will see what happens. All right, everyone. Thanks to everyone who's been subscribing. I really appreciate it. Make sure to leave a comment down below if you got any questions. Make sure to shoot a subscribe if you enjoyed the content. And as always, you know, leave a like if you enjoyed the content. So I'll keep making videos like this. We'll see everyone in the next one.